Lesson: Key regulatory requirements for blockchain deployments. Blockchain technology is transforming various industries by offering robust solutions for enhancing transparency, security, and efficiency. However, with these advancements come significant regulatory challenges that require meticulous attention from blockchain professionals. Understanding the key regulatory requirements for blockchain deployments is crucial to ensuring compliance and fostering trust among stakeholders. Regulatory compliance in blockchain involves navigating a complex landscape of laws and guidelines that vary across jurisdictions. One of the primary challenges is the decentralized nature of blockchain, which inherently conflicts with traditional regulatory frameworks designed for centralized systems. This conflict necessitates a comprehensive understanding of both existing regulations and emerging legal frameworks. Professionals must be adept at interpreting these regulations and implementing strategies that align blockchain deployments with legal requirements. A foundational aspect of regulatory compliance is data protection and privacy, particularly with regulations like the General Data Protection Regulation in the European Union. The GDPR poses unique challenges for blockchain due to its emphasis on data immutability, which conflicts with the regulation's right to be forgotten principle. To address this, blockchain developers can implement privacy-enhancing techniques such as zero-knowledge proofs and selective disclosure protocols. These tools allow for the verification of data without revealing the data itself, thus aligning blockchain operations with GDPR requirements. Moreover, the classification of digital assets is another critical regulatory consideration. Regulators worldwide are grappling with how to categorize cryptocurrencies and tokens, which can influence their treatment under securities laws. The U.S. Securities and Exchange Commission, for instance, uses the Howey test to determine whether a digital asset is a security. Blockchain professionals must conduct thorough analyses of their digital assets to ensure they are not inadvertently classified as securities, which would subject them to stringent regulatory requirements. Utilizing frameworks like the token taxonomy framework can aid in the proper classification of digital assets, offering a structured approach to assessing their characteristics and regulatory implications. Anti-money laundering and combating the financing of terrorism are also pivotal regulatory areas for blockchain deployments. Blockchain's pseudonymous nature poses challenges for AML-CFT compliance, as it can be exploited for illicit activities. To mitigate this, blockchain professionals should implement know-your-customer procedures and transaction monitoring systems. These measures involve verifying the identities of users and continuously analyzing transaction patterns to detect suspicious activities. Tools such as Chainalysis and Elliptic provide blockchain analytics solutions that facilitate compliance with AML-CFT regulations by enabling real-time monitoring and analysis of blockchain transactions. Smart contracts, which are self-executing contracts with the terms directly written into code, introduce additional regulatory complexities. The legal recognition of smart contracts varies across jurisdictions, and their deployment must consider potential liability issues. Professionals should ensure that smart contracts are auditable and include mechanisms for dispute resolution. The use of formal verification tools, such as CertiK and MythX, can enhance the reliability and security of smart contracts, providing assurances that the code functions as intended and complies with relevant legal standards. Interoperability is another crucial consideration in the regulatory landscape for blockchain. As different blockchain platforms often operate in silos, there is a need for standards that facilitate seamless interaction between them. Initiatives like the Interledger Protocol and the Blockchain Interoperability Alliance aim to establish frameworks that support cross-chain transactions while maintaining regulatory compliance. By adopting interoperability standards, organizations can ensure their blockchain deployments are adaptable to future regulatory changes and technological advancements. Furthermore, ensuring compliance with tax regulations is essential for blockchain deployments. The treatment of cryptocurrencies for tax purposes varies significantly, with some jurisdictions treating them as property and others as currency. Professionals must keep abreast of tax guidelines in relevant jurisdictions and implement systems for accurately tracking and reporting cryptocurrency transactions. Tools such as coin tracking and CryptoTrader tax can assist in managing the tax implications of blockchain transactions, providing comprehensive solutions for record keeping and reporting. Case studies exemplify the successful application of these regulatory compliance strategies. For instance, the blockchain platform Ripple has effectively navigated regulatory challenges by engaging with regulators and adopting a proactive compliance approach. Ripple's collaboration with financial institutions and adherence to KYC AML standards have enabled it to operate successfully within the regulatory frameworks of multiple jurisdictions. Similarly, IBM's Food Trust blockchain leverages privacy-enhancing technologies to comply with data protection regulations while enhancing supply chain transparency. By integrating these technologies, IBM has demonstrated how blockchain can be aligned with regulatory requirements without compromising its core benefits. In conclusion, navigating the key regulatory requirements for blockchain deployments demands a strategic approach that integrates actionable insights, practical tools, and robust frameworks. By understanding and addressing the regulatory challenges associated with data protection, digital asset classification, AML-CFT compliance, smart contract regulation, interoperability, and tax compliance, blockchain professionals can ensure their deployments are legally compliant and poised for success. The integration of privacy-enhancing technologies, formal verification tools, and cross-platform standards are vital strategies for achieving regulatory compliance in the dynamic blockchain landscape. As the regulatory environment continues to evolve, staying informed and adaptable will be essential for blockchain professionals dedicated to fostering trust and innovation in this transformative field.